Hey, Chad. Hey, everyone. So today for this episode, we'll be talking about the first-time home buyer program. Um, uh, right. So right now, we're just waiting for our special guest. His name is Chad Christians. He's a licensed loan officer here at Life Changing Lending. Hey, Chad, can you hear me? Hello.
Yeah,
Yeah, I can hear you now.
perfect. How's it going?
I'm doing good. How are you?
I'm good, man. I'm good.
So for folks that so for today, like I said, we'll be talking about the process of how to obtain a first-time home buyer loan. Um, and we're here with the loan officer. His name is Chad. He's a licensed loan officer here at Life Changing Lending. So Chad, tell us a little bit about yourself, what you do, how long you've been in the industry.
Yeah, so I'm with Life Changing Lending, and we're based out of Austin. And I've been doing it for 3 years now. On the traditional side, been non-traditional for about 2 years. Um, and do a little bit of everything.
Awesome. So, for those that never heard of FHA before or wanting to get their first time buying a house, uh, can you give them an overview of what's the process look like, where to get started, how to go from there?
Yeah. So especially for FHA, FHA is a really exciting program. Um, you can do it for first time home buyers or people that haven't bought a home in the last 3 years. But the big key on FHA is your down payment's only 3.5% of the purchase price, which is big. A lot of people think that you have to put 20% down to purchase a home, which just isn't true. One of the big things with FHA is they go down to 580 in order to get 3.5% down. So that's big for anybody that has marginal credit and thinks they can't qualify. But as far as getting prepared, make sure that you don't have any lates on your credit for the last 30 to 60 days. That's a big thing that will really hinder you from being able to buy a house. Saving up for down payment. Most of the time, people have just enough to be able to close on the house. But so, in most cases, they like you to see anywhere from 60 to 90 days in the bank. So make sure that you have enough to cover the down payment and the first couple payments. That's going to be a big thing for any underwriter when they're looking at your file.
Okay. What are some of the key thing that they can do to repair themselves in order to make sure that they actually approve for the loan?
Oh, you mean as far as like being able to show proof of reserves and things like that?
Mm-hmm. Yes, sir.
Yeah. So, as far as large deposits go, don't deposit any large cash if you plan on buying a house in the next 30 days. Make sure to give yourself a window, because if you've got 30 grand in a pillow from side jobs that you've been saving up and you decide to deposit it all in the bank, they're not going to be able to source it. So make sure to give yourself enough time for that money to season. So, if you plan on buying a house in the next 60 days, do it now. So that when you get a new statement in 30 days, it'll show that you didn't just deposit it 2 days ago, and it'll cover all those bases. That's a big thing, because that's a big thing that people don't seem to realize. Oh, well, I have $10,000. Let me deposit it real quick, and then it's like, okay, well, where'd that money come from? Oh, well, I've had it in a safe that I've been saving, and I've been doing odd jobs on the weekends. Well, unfortunately, Mr. Client, we can't use that as a source of down payment. Another thing on gifts, if anybody's going to give you a gift, because that's another big thing, make sure that anybody that's giving you that money, we can source that as well. because that will sometimes kill deals as well. If you give them $10,000 to gift it to you, but they only have $2,000 in their account before then, they won't be able to track where that money came from. That's another killer to watch out for.
Got it. And what are some of the most common thing that you see when people getting this type of loan? Like, what are some of the most common issues that they face while going through the loan process?
Ask that question one more time. Sorry.
What are some of the issues that you see while we're working on this loan, for example, right? What are some of the issues that you see that can cause a loan to get rejected?
Big thing is being able to get to verify income. That's that's usually sometimes a deal killer, because somebody tells you they've been working there for 2 years and they've been getting overtime. We'll come to find out, they've only been getting overtime for a year, so we can't use that. And then your ratios go up. That's a big thing that does happen from time to time.
Okay. And how important is the pre-approval process? Because a lot of people, they just go straight to the realtor, say, "Hey, I want to look for houses first," and then come to ask us, "Hey, can we get a pre-approval letter?" But so they should have done it the other way around. So
Yeah,
can you
yeah,
explain?
that happens a lot. People get excited and they start searching on Zillow. So then they call their friend who's a real estate agent, and they start going out shopping, and they're looking at $500,000 houses with a $2,000 mortgage payment budget. Well, then they go through the pre-approval process. They try to put in an offer. Come to find out that the mortgage payment's going to be 3,500 opposed to 2,000, and then they get let down, and then they have to start the process all over. So the big thing is getting pre-approved, know what you qualify for, shop within your budget, and go from there, because nothing's worse than getting your hopes up and finding that house that you fall in love with just to find out you can't afford it.
Okay. And what are some of the costs associated to buying a first home
Yeah.
using
So
FHA?
that's another big thing that people don't come to realize. They think, oh well, I have the 3.5% down. I'm good. I can go out and buy a house. Well, what they don't account for is you still have to account for closing costs, which are taxes, insurance, title fees, if that doesn't get paid by the seller. But the big thing that's awesome to that is, especially with FHA, is the seller can contribute up to 6% towards your closing costs. So, if you come up short and you just have the down payment and just have the reserves and you don't have enough money to cover the closing costs, the seller the seller can pay that.
Correct. Okay. So that's bring up to my next question is I know at Life Changing Lending we offer a lot of different type of products for not only
Mhm.
home buyers but investment as well.
Mhm.
Uh, what are some other options related to FHA that we offer to clients that not many people knows about?
Yeah, we have down payment assistance programs, which are big, and those go down to actually 580. So, other places you go, they have a minimum of 640, and they'll only give you X amount as far as covering your down payment. But we have programs we can go up to 5%. So it'll not only cover the down payment, but it'll cover the closing costs as well. So you can come to the closing table truly with no money down. And I've done it for a number of clients over the last few years. And that's probably the beautiful thing about doing FHA is that you can not only get your down payment covered, but your closing costs. So, again, true zero down. Now
Okay,
that doesn't mean that there isn't a down payment required. It just means that it's gonna be paid from a third party source for you.
got it. Okay, so let's say for example, if somebody came to you and asked, "Hey, I want to buy down the buy down the rate," for example, do we have any options like that for
Yes.
first time home buyer?
Yeah. Yeah. We have a 1.0 buy down where you can buy the rate down. 1 point for 2 years, and we have a 2-1 buy down where you can buy the rate down 2 points um, for 2 years, and then you can also get a 3-2-1. So you can buy the rate down 3 points, and it'll go up a point each year for 3 years till it stays fixed. So there's a multitude of options. I had a family member that did that. They did a 3-2-1, and they were getting COVID rates when rates were at their highest.
Gotcha. And you mentioned about the first time for the down payment assistance for FHA. For those that not very familiar with it, can you explain what they are? How do they
Yeah,
qualify for it?
yeah. So there's a few different um, programs that relate to down payment assistance. So you have a grant. So it's a forgivable loan that you have to keep for 3 years, and then you never have to pay it back. That's one option for down payment assistance. Then they have a second mortgage that you can take. So, you have a 3.5% down payment requirement. Well, 3.5% is going to get paid by a third party company, and you're going to make a payment to them for the down payment. So they're going to come to the closing table with the 3.5%. So you don't have to bring any money to the closing table. Then they'll roll in that second note into your first note so you can pay back, not only the mortgage payment, but the down payment that you borrowed.
Gotcha. So when they're looking for an FHA loan, what are something that they should be looking for in terms of properties? Like what type of property they're looking for? Can qualify
Yeah.
for? Is
Yeah. FHA appraisals are a lot stricter than conventional. So you got to make sure that everything's up to spec as far as the house goes. You got to have central heating and air. You got to make sure if there's railings on the steps that lead up to the house, make sure that they're intact. Make sure to get a home inspection before moving forward on your purchase, because appraisals can kill deals very, very quickly, because some of these houses that are out there are 30, 40 years old. The homeowner hasn't done a whole lot of renovation to the house to make sure that it's up to spec, and you can get a subject to appraisal, and they'll need to do a lot of, in some cases may have to do a lot to the property just to get it up to spec, and a lot of sellers aren't wanting to do that.
gotcha. So a lot of time I have a lot of client came to me and asking, hey, for FHA, can the property has a deferred maintenance on it? Is it a yes or no?
No.
Okay. What type of property can it qualify for? Can it only qualify to buy a single family, or they can buy other
No,
type of
that's the
property?
beauty of it. You can buy up to a 4 unit,
Okay.
and you can use the other units to offset the mortgage payment as well, but you have to occupy one of the units. So if you buy a 4 unit, just just know that you have to occupy one out of the four.
Gotcha. And what about like manufactured home?
You
Because of the
can
cost, because
you
the cost
can
of sorry.
Yeah, you can buy a single family, or not a single family. I'm sorry, uh, a single wide, double wide, triple wide. On the single wide, there has to be 10 years or newer. So that's a caveat to buying a single wide, is they have to be 10 years or newer.
Got it. Okay. Um, is there certain locations that the FHA doesn't
Yeah.
qualify for?
Well, as far as location goes, you have to be within a certain distance from where you work. So you can't buy a house in, let's say, Houston, and have a job in Austin or Dallas. It has to be commuting distance.
Gotcha. And in terms of the house, does it matter how old the house is going to be, or it just have to be a turnkey type of house?
No, they'll even do historical homes. So, but they do have to be turnkey. I mean, they have to be up to spec. There's going to be certain requirements that FHA is going to require that the house has standard in order for them to be able to loan on it.
Got it. And for a typical FHA, how long does it usually take for a pre-approval letter to come out? And once that complete, what are the next step to go after that?
Yeah, everybody's pre-approval process is a little bit different, but like for us, it takes us about 48 hours to get you pre-approved. And then the approval process, once you get under contract, typically takes 30 days.
Okay. So, what are some of the issues that you see on a title that could literally affect the closing of the FHA loans?
On title, so if there's existing liens, probate's a big one that kills deals or prolongs closings.
Okay. Um, let's see. So for this type of loan, you said how long does it usually take to close?
It takes usually 30 to 45 days.
Got it. And if you can break down the process for someone that's very brand new to buy the house, for example, to come once they probably get a contract,
Yeah.
what is the next step and so on.
So from start to finish, so you like a house, you're pre-approved.
Mhm.
You go in, you put in an offer, your offer gets accepted. They'll require you to put earnest money down. Earnest money typically runs 1%. Everybody's a little bit different, but standard norm is 1%. So $250,000 house, you're gonna go to title and wire them or bring them a cashier's check for 2,500. That's gonna sit in escrow till you close. It's gonna be applied towards your closing costs. So after you do that, you send out an inspector. They go, they do an inspection report, they get it back, you review it. You usually have an option period that lasts anywhere from 7 to 10 days, and that option period is to for you to do your due diligence on the property in order for you to get your earnest money back. Right. Then after the option period, you have your financing contingencies. So usually, that inspection gets done within the first few days of you being under contract. Once that comes back, you order an appraisal. An appraisal takes anywhere from a week to 2 weeks. And in that process, your file will go into underwriting. Underwriting will do all their verifications of employment, verifying your W-2s, those sort of things. Your credit profile, your assets, all the above.
Okay.
Then your appraisal come back. If your appraisal comes back at value, it'll go back in for final underwriting for the underwriter to review the appraisal and whatever items that were needed, verification, employment, those types of things. Then after that's done, you have 1 to 2 days for title and closing department to balance for final, and then you'll get your final CD, and then right after that, you can close. Which a lot of people, the typical question I get, especially with first time home buyers, well, when do I need to bring the down payment? They always think it's, oh, once I'm pre-approved, I have to bring the down payment. But you won't have to bring your down payment until the closing day, till you sign on the home and you get the keys. That's when you bring the full down payment.
So the down payment doesn't have to be seasoning in the bank.
The down payment does. So it needs to be in season in the bank for at least 30 days.
Gotcha. And then the next thing we'll be talking about is the um, one second. So we all know that every month there's a fees that you need to pay, right? What are some of those fees associated to besides the principal and the interest?
Oh, besides principal and interest, so you have homeowners insurance, which you have to pay every month, taxes that you have to pay every month, and private mortgage insurance. And private mortgage insurance is required on all FHA loans because you're putting a very minimum down payment, which is the 3.5. So, FHA is going to insure the rest of it just in case you default on the loan, and they have to obviously foreclose on the house, and that whole process is very expensive for them. So they carry mortgage insurance the life of the loan.
Got it. So is there a way to get rid of the private mortgage insurance after like certain point?
Yeah, once you've reached 80% loan to value, you can refinance the property into a conventional loan, and then you won't have to pay private mortgage insurance anymore.
Gotcha.
One thing that we haven't touched on, especially that's really awesome with FHA, is they have a 203k program. So let's say you buy a house and it has foundation issues, or it has certain issues that need to be fixed on the property. You can do a 203k, which is a renovation loan, which not a whole lot of people know about, especially for first time home buyers. So you only have to put the 3.5% down. You can finance the rest of it. And that's a huge thing that nobody really dives into, especially with the 250k program. If you wanted to add a pool to the property, you could, as long as it's going to add value to the property.
Okay. When you brought up the 2-3K, is there certain amount of cost that you can qualify for, or is it based on mainly based on your debt to income and
Yeah,
your
yeah,
opinion?
your debt to income is going to play a big factor in that. Obviously, it has to it has to match up with what the home's going to be worth after you fix it, right? You they don't want you to finance $100,000 and it's not going to add any value to the house, and you're going into it owing more than it's worth.
Gotcha. Well, that's gonna be the second episode when we actually dive into the 203K, and pretty much you be talking about like, hey, how do we qualify for it? How do builder get qualified for it? What are the process? So that going to be happening next Friday, at around like 1 p.m. or so. So as of today, that's pretty much just the overview of the normal FHA loan. Well, thank you so much for coming, and um, for those that view us and join us on this, if you have any questions, feel free to leave your comment below, and he or I can ask him to answer any question you might have. So thank you so much, Chad,
Thanks, Tam.
for taking time
That
for
was a
this.
good time.
Yes, sir.
I'm looking
Thank you.
forward to next week.
Yes, sir. Have a
All
wonderful
right.
day. Bye bye.
You too.